just business news, we're news for business people. Hello and welcome. You're watching Countdown on Bloomberg Quint Live, India's first digital live streaming business news service. These are the top headlines that we're tracking at this hour. In its first ratings upgrade after 2004, Moody's upgrades India's credit rating to Baa2 with a stable outlook. Finance Minister Arun Jaitley says the upgrade is a belated recognition of the steps taken by the central government over the past 3 years. The markets share the ratings upgrade. The Nifty reclaims the 10,300 mark. IT stocks decline on back of an appreciating rupee. And HDFC Life has a strong listing on the bourses, list at a premium to its issue price of 290 rupees per share.
Well, so these are the headlines. And look at the markets today. Second consecutive century for Nifty. Although Nifty and Sensex are trading a bit off days high levels, if you look at it, there was some profit booking from the highs that we saw early on in the day, close to 10,350 odd levels. But overall, market has remained positive, and there is some additional buying also seen across sectors, so to say. If you look at the mid-cap and small-cap space, also you look at the advanced decline, or you look at the heat map, it kind of tells you that the buying has been broad-based, though there is some correction from the higher level. So you can still look at it. The market breadth is almost telling you that 75% of the stocks that are traded today on the National Stock Exchange are on the positive side. But a lot of them have actually given a gap up, and after that they are just sustaining in the positive zone. How much is the additional buying? That's the question we'll try to answer over next 1.5 hours. If you look at this heat map now, in the morning when we opened, 90% of stocks, in fact, if I remember it correctly, barring a few IT stocks, Infy, Tech Mahindra, TCS, HCL Tech, that stay at the bottom even today, even now, all the other Nifty components were in green. So there is some bit of correction, you can say. Here also we have seen some profit booking in stocks like ONGC, Z, which is interestingly down for the 5th day this week. When market has improved over the last 2 days, Z has not at all participated in it. L&T, HUL are some other key stocks which have actually seen some amount of profit booking at higher levels. But which sectors or stocks are really the big gainers? Financials, rate sensitives, and interestingly commodities. So you have ICICI Bank, Yes Bank, Bajaj Finance, IndusInd Bank, HDFC all taking the lead, and also SBI, PNB, the PSU lot. You also have on the positive side stocks like Vedanta and Tata Steel. So these are the two key sectors, financials and metals, which have really led today's rally, and they are still holding on to the gains.
One more sector there. The Nifty Realty Index have registered strong gains. In fact, if you could just pull up that chart, 4.5% gains coming up there. In fact, we've not been able to talk too much about the Realty pack, considering the biggest news of the day was the Moody's upgrading India's sovereign rating. Look at that. It's up over 4%. And it's not only the constituents of this index. Realty stocks overall have been doing well, be it from the likes of Ansal Housing or even Kolte Patil have registered strong gains. Peninsula, Suntec Realty, all of them have seen strong gains coming at about. Even DLF, HDIL in just last 1 hour saw strong buying. DLF, in fact, is trading at its fresh 52-week. And I guess the move, Pradeep, could be on the back of that update which came about, where Cabinet approved increasing the carpet area under the Pradhan Mantri Awas Yojana scheme, whereas there is some bit of benefit which is given to the buyers of the affordable housing scheme.
Subsidy available to MIG1 and MIG2.
There is some interest subvention scheme.
Interest subvention or a subsidy that government provides. So up to a property of 9 lakh rupees or a loan of 9 lakh rupees, I guess, you get 4% subsidy, and up to 12 lakhs you get 3% subsidy. So that benefit has been extended to larger houses now, which means it will cover more properties, maybe more, higher number of buyers will now qualify for it, because not everyone who is not so well-to-do or still in the middle class or lower middle class would like to really buy two small houses. That is probably what government has recognized. But that's a good news for all these real estate players.
Okay, so good day for the real estate companies. But moving on, let's also get you some cues from the futures and options market. We definitely had a strong opening coming about, but I would just like to remind our viewers there were enough shorts in the system. In fact, until yesterday, FIs were net short in the derivatives market. In fact, I was checking the clients' data as well, where a couple of HNIs are present on the index futures. Even they were net short. So probably the initial gap up opening which you saw was on account of short covering. As Pradeep mentioned, markets are slightly bit off day's high. It remains to be seen whether there can be incremental buying which can come about after this good news or not, because there were enough shorts for markets to pull up on such a good news. But overall, if you go by the cues, what's happening in terms of options data, the Nifty 10,200 and 300 call strikes have started seeing some bit of unwinding after the market had a gap up opening. But interestingly, have a look at the 10,300 put. In just 1 hour of trading in the morning, it added almost 20 lakh shares, but throughout the session now, it's just about 24 lakh shares. So the put writing has remained somewhere in that level of 20 to 24 lakh shares. But once again, you're out of the money call strikes for the likes of 10,400 and 500 are seeing a bit of open interest addition. So that's about the options data. Bank Nifty, obviously, we know it opened at all-time high levels. The next level to be watched out will be 26,000 on the upside. That's where the maximum call base is as of now. Just two stock futures I want to mention. One of them is DLF. We've already spoken about it. It's among the real estate pack, one of the top gainers in the Nifty Realty Index. The stock has gone up on account of very high volumes in the cash segment as well. And obviously, we've seen fresh longs on the futures side. That's DLF, 13% higher. The other one is Just Dial. The stock came out of the F&O band today. And look at the spurt that's had. Just Dial underlying is up almost 4%. So once again, it's seen good amount of fresh longs, up almost 24% open interest. And as I remember, Nomura had increased the target price of Just Dial to almost 635 from 590.
So these are some of the interesting stocks, and we'll try and get you more views on this development, a big development actually, the rating upgrade. And let's now listen in to a slice of the conversation we had with ace investor Rakesh Jhunjhunwala earlier in the day. He's not quite bullish on the rupee, but believes that India's long-term bull market has just begun.
Well, my thought is an endorsement of the policies that the government has followed in the last 3 years, and a recognition of the great change that India is going through, and they are looking at it positively.
Yes, they are. Does the timing surprise you, Mr.
And it's a fitting answer to the critics of the Modi government.
Fair call. Sorry, I thought you had ended the
But
question.
it doesn't surprise me at all here.
No, the reason I'm asking about this timing...
I thought it doesn't surprise me at all.
Okay.
About this?
Yeah, the reason I'm asking that whether this timing surprised you or no is because rating agencies typically tend to follow delivery and print. This time around, Moody's has gone ahead and taken a forward view on what could happen as a result of the structural reforms. Does that surprise you?
Well, I'm not so much conversant with what rating agencies do, but I am very happy. I read the note that they released along with the press release. They are clearly making a call that economic growth in India will accentuate. These reforms are in the right direction, right? And that, I think it's a big thing that they're taking some call on the future, and also that the fiscal position, although there may be some overshooting of the 3.2 target, is going to be under control. And they're also calling on the political stability in India and the fact that further reform is on its way.
Yes, indeed. That is true. Embedded in their view as well, as I'm sure you read, is an endorsement of one more view of yours, that oil will stay at these levels. I've heard you on numerous occasions speak about you don't believing that oil prices are slated to go higher. In our conversation with Moody's today, they said that they believed the band was 40 to 60, and therefore vulnerabilities of an economy like India to a higher oil price shock is not taken into consideration. That's music to the ears as well.
Yeah, and what is music to my ears also is that some international agency is recognizing, what I feel. We are on the same wicket. And I don't think today, I read in the news yesterday that Russia is saying that as long as oil is above 60, there should not be further curbs of production. And the shale production has already come back. And shale has just started. Mexico has made a discovery of what is going to be one of the largest onshore fields in the world. So both there is plenty of oil and plenty of oil to come. So I don't see oil going above $60, $65 levels. I think there'll be a range will be, according to me, the range will be between say 50 and 60.
Okay, that's an important view on oil as well, an important comment from Mr. Jhunjhunwala. One more assumption that they've made, and okay, let me not say that it's an assumption, a factor that they said will lead to any kind of a future rating upgrade or an upward pressure to ratings, as they call in their language, is a pickup and a quicker pickup of the investment cycle. Mr. Jhunjhunwala, what are your thoughts here? Ratings is one thing, but earnings need to pick up, and they've started showing signs. But what are your thoughts on both of these factors, earnings and then the investment cycle, sir?
Well, I hope earnings will improve quarter on quarter. And the investment cycle is very difficult to predict. But I think the start of the pickup in investments, it has started. It's a process. It's a journey. It's not a destination. I think slowly with time it will pick up. See, we can, I'm not some economist. I can predict the direction. Now, what speed and what depth, I can tell you one thing, that it was 27% of GDP investment in 2003. In 2008, it was 35%. China's is 45, 46%. So I think the next 3 to 4 years, it will go back to 35%.
Okay. Is that a timeline that you would be happy with, Mr. Jhunjhunwala? The reason I'm only asking this is because the markets are in a fast-forward mode, right?
Well, it's not question of my happiness. Or
fair call.
It's not whether I am happy or unhappy. We have to see reality. My happiness or unhappiness doesn't matter.
No, what I meant was, do you think the markets at large would be happy with the time horizon of 24 months to 36 months that it could take for the investment cycle to pick up, or would
they would be? No, one thing is that one is the time horizon, one is the pace.
Sure.
And as time passes, it will catch pace. If it's going to revive in 4 years, it will be slowest in the first year, much more in the second, much more in the third.
Fair call. Do you think, Mr. Jhunjhunwala, that this PSU bank recap move is also one factor which leads to, one, the investment cycle, and two, the change in outlook that almost everybody is having? Because all the brokerage conferences that we had, all the foreign institutional investors spoke about that. Moody's has referred to that point in their statement as well. How big a change has that brought about, sir?
What? Come again? What has brought about?
The PSU bank recapitalization move.
The question is so long, I forget it. What was it?
The PSU bank recapitalization move.
See, I don't think the bank recapitalization, the PSU bank recapitalization move is important for the capex cycle. What is important for the capex cycle is demand and ease of business. If you have demand and ease of business, capital is always available. So, in my mind, what's more important for revival of the capex cycle is demand and ease of business. If these two is prevalent, capital will come wherever it comes from. There's no shortage of capital in this country.
Fair call. And well, there is a bit of a notch up that we've gotten on the ease of doing business as well. One factor wherein foreign institutional investors have gotten completely wrong this time around compared to domestic investors and people like you as well is the last 3 months the market mood and the change in earnings cycle as well. Do you think that is here to stay, Mr. Jhunjhunwala?
See, one thing I can tell you, Mark Faber says, I read in 1999, Mark Faber said, the locals always know better. Let me tell you, in any country, the locals are far more better investors and better anticipators of growth than the foreigners. And in my opinion, this flow of 1 lakh crore into mutual fund, the investment in the last 12 months, this is just the beginning. It's not a flood. The flood is still to come, and the tsunami has to come after that. So I don't care for the foreign investor. Let them do what they want. I'm more concerned about the local investor and his money.
No, that is true. It is heartening to see that Indians are benefiting.
You know, this phobia of foreign investor, was we also have capital here. They sold, but did the markets go down? And to my mind, I don't look at foreign investor and local investor. I think for the local, there is no choice but equity. And I'm not looking at for 30% return and 40% return, I'm looking at 15% return.
Well, I hope people who are listening into this conversation take cognizance of this as well. Mr. Jhunjhunwala, last couple of questions. Understand you have a busy schedule. Would you believe that the structural reforms in place are great for the long term? And by long term, I mean 3, 4, 5 years. What would happen, sir? And I'm not asking for levels here, but what do you happen to the market mood in the immediate 12 odd months? Because we are heading into the election season as well.
Well, the election season is important. And see, these reforms are not important for 3, 4, 5 years. These reforms are important for 50 years. What change takes place? See, what happened in 91? When the change took place, people were shell-shocked. But that led to the biggest growth in India. And next 12 months, as of now, the mood is bullish. We should not forget we have come from 6,800 to 10,500 without any meaningful correction. Market can correct, but the bull market is not going to go away for a long, long time.
Something that you referred to in your initial question, Mr. Jhunjhunwala, is that Moody's seems to have taken into account slight fiscal slippage that could come in as well. The finance minister has made a small hint towards that recently in Singapore. Does that worry you, or do you think a 20-30 bips miss will be taken into account?
No, it doesn't worry me. It doesn't worry me. I think it's already been discounted. And another thing is Mr. Modi has a track record of being a fiscally responsible person. Right? He's not a one who will spend himself to inflation. So seeing his track record and seeing this government's track record, they are not going to let the fiscal deficit go up beyond a point. And the recommendation that if any structural change is taking place, we have to bear a higher deficit for a certain period of time.
Fair call. Last two questions, Mr. Jhunjhunwala. Can't not ask.
Is that enough? Anything else?
No, just last two questions, sir. One is your thought on the currency. I know you said that you are no economist, but do you have any thoughts on what the currency could do over the near term or the medium term?
I'm not so bullish on the rupee. I think the rupee will go down. I see levels of 66, 67.
Fair call. And my last question, I remember your comments 3 years ago when this government came to power that you mentioned that this is the start of this big bull market. I'm presuming that we are still at the starting stages and not in the middle of the bull market. There's still a long way to go.
I think it's a long. I think we were to go from Bombay to Delhi. We have just reached Dhanu here. We have not even reached Surat.
Fair call. And we are in a road trip which could
we have reached Borivali, I would say.
Well, if we've just reached Borivali, then definitely, Pradeep, it looks like it's just the start of the bull market, according to the ace investor Rakesh Jhunjhunwala. But Pradeep, you've got some interesting chart there on the screen, which I don't understand at all. Again, I can see some candlesticks there, but what is FIB? That's a new jargon which is there on the screen today.
Well, it's Fibonacci actually, and I don't know when Rakesh Jhunjhunwala started from the Mumbai or South Mumbai, but we have started just around a couple of days back. So here we are on 6th November when we hit a high at around 10,490, and then just 2 days back we hit a low. We corrected by roughly 400 points. What today we have seen is 250 odd points bounce from there. Before I talk about the Fibonacci number and why it is important, let's look at what has happened today. These are the hourly candles, by the way. So you can see 1, 2, 3, 4, 5, 6 candles for today's session. What is truly disappointing is, we hit the day's high in first hour of trade and we have not been able to retrace it or go above that level. After, such a big news that we had, people were really surprised with this upgrade, but traders didn't really take long positions at higher level. They were probably, unwinding some longs if they had at all. And we also haven't seen the kind of panic among short traders as you normally see when there is such a surprise news. So what has happened is that we have hit the important resistance level in the very first minute, and after that we have been struggling really to go up from there. Now let's talk about what indicator this is. This is Fibonacci number, and especially the 61.8% is a level that we keep referring to, especially in the context of Nifty, because Nifty tracks this level very closely. What it tells you is the 61.8% retracement level was today at 10,339. For this entire decline, we retraced almost to that point, just 4 points above that, and after that we are stuck. Big question today to answer really is, what we have seen over last 2 days, this 250 points move on Nifty, is it a pullback or is it a new uptrend? To answer that question, Nifty really needs to cross this mark. Nifty needs to close above 10,340 or 350 odd levels, and then we can probably start talking about a fresh up move. Otherwise, probably this was just a pullback. So this is a trend deciding point that will tell us whether this is a pullback or it's a fresh up move. So today we have kind of failed to cross that, and I won't be surprised if you see more unwinding or maybe profit booking in last hour of trade.
That's very interesting, Pradeep, because you know what, we've been highlighting that at least in the derivatives data, the FIs as of yesterday, they're net short in the market. So what you said, we've not touched the opening high levels, and that's precisely SGX Nifty was actually suggesting the gap up opening, and what looks like that the morning bounce back which one saw was maybe on account of short coverings. People who had shorted were covering their positions today, but it'll be very interesting to see the internals coming in from the FIs. Remember, last 2 days they were selling in the cash segment, they were creating more of short positions in the futures and options market. Does that change or not? It'll be very interesting to see whether the stance by the FIs change. But let's just check what the turnover currently looks like, because on a day like this, when somebody would expect some sort of incremental buying to come or some fresh positions to be created, the turnover is just about muted. The cash turnover is just about 30,000. On a normal day, we do see turnover from NSE cash to be somewhere between 32 to 35, and the NSE F&O turnover, let me tell you, as of now, it's just hovering around the average levels. On an average,
an hour to go, though.
Yeah, just an hour to go. Let's see if in the last hour it can add maybe 2 lakh crore. It will be just above the average what we usually see on a normal day.
It would be also interesting to see what kind of build-up have we really seen in Nifty, Bank Nifty, or the key derivatives, the liquid stocks, because yesterday there was definitely some build-up that significant build-up rather, that indicated that people were taking fresh long positions. In the
PSU banking space, I think in the last hour we did pinpoint that there were a spike seen for stocks like Union Bank or Bank of India. The entire PSU banking space was definitely up in the last 1 hour of trade, but if you look at it today, at one point of time, it was up almost 3 to 3.5%. So from those higher levels, Pradeep, there has been profit booking. Look at Union Bank, it's now in the red. And yesterday, just in last 1 hour of trade, there was some buying seen. So probably traders who would have bought into these stocks yesterday are looking to, book their positions today.
Yeah, looks like. So not much faith really that people have. Maybe there could be a Friday factor also, and overall mood has not been very optimistic over this week. Only the last 2 sessions when we have seen a good up move, and today in fact there was a gap up, so we probably crossed, we reached the target or close to the target too early, and therefore maybe traders might have decided to book some profit.
Well, I'm not very sure if ONGC was also upgraded by Moody's. I'll check with our producers, but look at that. It was. That's what the producer just confirmed. And these are the stocks which are off day's high, Pradeep. ONGC is down 3% from its day's high. And IT obviously was down since the morning session. So not talking about that because of currency appreciation. But look at stocks like Axis Bank. You've also got Bosch or Bharti Infratel are seeing a bit of profit booking, which has come in the trading session right now. So clearly,
so there's an interesting data actually that I'm quoting from a Bloomberg article today, which says that China was downgraded to A1 from AA3 in May by Moody's, and its equity market has in fact jumped 26% from there. And contrary to that, Indonesia, which was upgraded by S&P Global Rating the same month, has risen only 4%. So there is no direct relationship between rating upgrades and market performance, maybe.
Well, clearly it just looks like the sentiment, bit of change in the sentiment, but as of now, good news definitely in terms of upgrade coming by. Maybe let's see if the macros change from here on or not. But there is a bit of jitter in the markets after yesterday. FM highlighted that they may not be able to meet the fiscal deficit target. But let's move on, staying on with that big development of the day. Earlier in the day, we caught up with Mary Duran, Senior Vice President, Sovereign Risk Group at Moody's Investor Service. And though she expects short-term disruptions to the economy, she says both growth and government finances will improve in the medium term. Listen in to Moody's rationale for this upgrade.
Really, the impact of reforms on the economy's potential will materialize over time, and it will take several years really for that to come through. That's related to the breadth of the reforms, the complexity of the reforms, whether we're talking about GST that should really enhance productivity, whether we're talking about measures that are aimed at enhancing and fostering greater formalization of the economy, including GST as well, but also measures like direct benefit transfers and demonetization. So all of that will materialize really over a number of years. What is particularly important for India's credit profile is that with a growth sustained at high levels, whether it is 7.5%, 8% in the next few years, then nominal GDP growth will be strong, and that will allow the government debt burden to remain at least stable and potentially even to decline gradually over the next few years.
Marie, did you, I'm sure you did take into account, but how, should we read into your upgrade to suggest that you're not particularly concerned about the short-term fiscal pressures that are building up? GST has caused a fair amount of disruption in terms of the indirect tax revenues. We don't know whether the government will be able to meet this year's numbers. Are you sort of putting that aside as the short-term impact of large disruptive moves?
Yeah, so we take into account these disruptions, these short-term effects. We reflect that in our forecast. So we have, for instance, revised our growth forecast for this year down to 6.7% before we expect a pickup next year towards 7.5%. We have also revised our deficit forecast, and so for the general government deficit, we now expect 6.5% of GDP this year, and government debt to rise slightly towards 69% of GDP. This is short-term, and our rating assessment really combines that short-term analysis with the medium-term vision and the medium-term analysis of really where India's credit metrics are going. And these medium-term, we think, prospects are improving and have improved compared to last year or a year ago, whereby we are more confident that even in downside scenarios, general government debt will remain broadly stable. And so that's that stability that we think is consistent with a Bidawali-2 rating at this stage.
So government debt will remain stable. That's the hope based on which Moody's has taken this decision. Bankers too have lauded the ratings upgrade and consider it a big positive for the country and the economy. Listen in.
I think it's taken a long time for Moody's to give India an upgrade in its rating. I've always felt that India's rating was far below what it should be, particularly during the last 2-3 years, the number of reforms the government has undertaken. It's a little too late. We should have got it much earlier.
The government's fiscal prudence itself, it gets a thumbs up, apart from the far-reaching reforms which we have seen in the banking sector, the recapitalization program, the adoption of insolvency and bankruptcy code, the GST reforms. All these, they get a thumbs up from the international investors.
I think this is a very well-deserved recognition of the structural reforms that have been undertaken by this government over the last couple of years. It is also very heartening to note that Moody's has taken cognizance of India's higher growth potential and the increased economic resilience as compared to the other countries in our rating cohort. This is also a huge positive for the Indian government and the Indian corporates because it reduces the borrowing costs for the government. It also leads to lower credit risk premiums for the corporates, which leads to cheaper cost of capital for the corporates. This move, I think, will also help in improving the availability and access to capital overseas for the Indian companies. Because even new long-term investors such as pension funds, etc., can now start investing in Indian bonds.
All right, let's bring in Sumit Bagadia, Associate Director at Choice Broking, to get some views on the markets going. When Nifty is trading around those levels of just 10,300 right now, marginally below that. Sumit, hi, good afternoon. Thanks a lot for joining us today on Bloomberg Quint. What's the call on Nifty and Bank Nifty at these levels?
Hi, good afternoon. I think markets are very strong. From here on, there is a possibility that we might see a good up move in the index, wherein as far as Nifty is concerned, immediately I think one can initiate long positions at the current market price, that is 10,300, 290 levels. If there is a dip of around 10 to 20 points from present levels, then that should be used as a buying opportunity. Technically, it seems that 10,230 is a support. So for a trading perspective, one can maintain stop loss of around 10,230 levels. And from here on, we can see a move around 100 to 150 points in next couple of days. So on higher side, we can expect Nifty to touch levels of around 10,400 or 10,450 levels in next couple of days. As far as Bank Nifty is concerned, Bank Nifty is looking strong. It has given a breakout, trading near lifetime high levels. Seems immediately the resistance is placed at 26,000 levels. As soon as 26,000 is taken away, we can see move till 26,200 levels. So immediately one can initiate long positions in Bank Nifty at CMP. If there is a dip of around 100 to 150 points from present levels, then that should be used as a buying opportunity. Downside, one can maintain stop loss of around 25,600 on lower side for the upside target of 26,200 levels in next couple of days.
Okay, so buy call on both Nifty as well as Bank Nifty. But what about the individual stock ideas, Sumit?
Yes, a couple of stocks are looking good to me. Yeah, Berger Paint has given a move. It's looking strong on charts. I think one can initiate long positions in Berger Paint at CMP. On higher side, we are expecting stock to move up by 15 to 20 rupees from present levels. That means one can initiate long positions at CMP with a stop loss to be placed at 249 levels on lower side for the upside target of 275 levels. We can see these levels in next couple of days. The second pick for the day is from metal space, and that is Vedanta. Vedanta is looking good to me. Most of the metal counter are looking good on charts. So as far as Vedanta is concerned, it has given a correction in last couple of days. Now after taking support, it has given a move. Immediately there is a possibility that from here on we can see a move around 15 to 20 points. So for a trading perspective, one can initiate long positions in Vedanta at CMP with a small stop loss to be placed at 300 levels on lower side for the upside target of 330 levels in next couple of days.
Okay, real estate seems to be buzzing around at the broader end of the spectrum. Any realty stocks, Sumit, that you are choosing to trade, or are you leaving them alone? Because there has been a rally already. Kolte Patil, HDL, DLF of the world are all moving around and trading close to or at the day's highs.
Yes, absolutely right. Most of the real estate stocks have given a move. Looking at the chart, it seems that still there is room left for DLF. Out of all the stocks which you have said, I think DLF is looking good. One can initiate long positions in DLF at CMP. If there is a dip of around 7 to 8 points from present levels, then that should be used as a buying opportunity. DLF had resistance at around 215 to 16 levels. It has given breakout above 215 to 16, and today I think we will see closing above 215 to 16 levels, which would be a positive sign for the counter. If we see closing about 215 to 16 levels in DLF, then there is a possibility that from here on we can see a move around 10%. That means on higher side, 240 to 50 can be the target for next couple of days. Those who have taken long positions at lower levels, they can hold on their existing long positions with a stop loss to be placed below 215 levels. One can initiate fresh long positions at CMP with the same stop loss for the upside target of 240 and 250 levels in next couple of days.
Sarvendra Srivastav is also with us. Sarvendra, we have a UBS guest waiting, but just before that, trades from you, one on the index and two on some specific stocks.
See, on the index, I would like to just give the flavor. My sense is that last week what we had affirmed lower levels at 10,150, they were achieved this week. But overall picture has not changed. So what I had suggested last week as well on the close is that my sense is that the move that started from around 8,000 levels, that 8,000 low post demonetization, that low from 8,000 to 10,500 thereabouts, I think that move more or less is over. So brakes have been already applied. With today's rating upgrade, I think I am of the contrarian camp. I think if I can narrate a similar instance, I think 2013 May, Reuters had said that they reiterated almost a junk rating, one notch above junk rating, and from there the rally started. So today's upgrade for me is more like a contrarian. I think within the sentiment, I think the best is over, and the market could actually correct. So I would say that it is a very critical point. So I would say I would not go naked long shot. So I would use options, and that too 10,500 is a critical level. If we break out past that, definitely the market could add some points. So at a 120 point range, I can get a 10,300 and 10,400 strangle. So which means 10,300 put I will buy around 60, and I will also buy a 10,400 call around 60. I'll make a long strangle and wait. My sense is that the put will give me money and the call will not, and I would keep it on and live for the next 15 days till expiry on Nifty. Coming to stocks, one stock probably which has reversed nicely for the day is MCX. I think clearly 940, 950 thereabouts were the last multi-month lows for this stock around that level. So a reversal today, I would like to trade it on the long side for a target of 994, keeping a stop loss at 993.40. All levels are on spot. And two sell trades that I have got today. First one is a sell on M&M Finance for a target of 415 with a stop loss kept at 445.60, and one from the cement pack, which is Ambuja Cement, a sell for a target of 260 and a stop loss kept at 283.10.
Okay, so those are a couple of the trading strategies highlighted by Sarvendra. One of them is on Ambuja and the other on MCX. Let's now shift focus to the UBS India Conference. Vishal Goyal, head of banks research at UBS Securities India, joins us on the show now. Hi, Vishal. Good afternoon, and thanks a lot for joining us on the sideline of your conference. First up, the news of the day has to be Moody's upgrading India's sovereign rating. I just want to know what kind of reaction are you getting from the investor community there?
So I'm sure all investors are positively, happy about it. Clearly, I think the rating upgrades enables lower overseas borrowing costs. So fundamentally, it's good for the economy. Also, clearly, it allows a lot of investors who have ratings as one of their filters to allocate more money to India as a portfolio. So I think overall, it clearly leads to extra flows to the country.
Vishal, what does this upgrade mean for the Indian banking system?
So I think if you look at Indian banking system, there are the overseas borrowings, which even Indian banks do, and in turn, basically they lend it to the larger corporates. So the cost of borrowing would clearly go down. I'm sure that would start reflecting in the CDS, which trades overseas for these banks, and that clearly will either enable slightly better spreads or it will enable lower borrowing costs for the Indian corporates. So I think that is the clear direct impact.
Vishal, afternoon, and thanks for joining in as well. If you look at the Moody's report as well, I think there is a decent mention of the PSU bank recapitalization across the board. We were speaking to Jeffrey Dennis yesterday, and he was referring to the same as well. I think it would be the focus of attention of investors right now, asking for your view on what happens to PSU banks and whether, how about money flows into the banking space? Do the flows come into the PSU banks in the first place? And if so, do they come at the cost of the private banks, or even that continues as is? What has been your analysis?
Sure. So I think the recap part, there are a couple of things which we still would want to know, especially from the government, whether what is the framework within which they would be that would happen. That is one. Second, I think what we learned already is it would be more concentrated to the large high quality corporates or banks, and therefore it may not be socialistic in some sense, that giving capital to every bank. To that extent, you should expect the larger, more efficient banks to be more stronger. That is, I think, number one. Second, I think the need of capital infusion, I think, is still far bigger than what the recap is being arranged. And therefore, I think what it would mean is it would maximum provide for the existing NPL provision gap, which would allow some breather in the year forward. But I think for growth, these banks may have to look to the markets to raise capital. Now, with respect to the private sector banks, it clearly increases competition for the private sector bank because of the increased capital at the hands of SOE banks, and to that extent, I am sure it will be slightly more difficult for them to gain market share as they have been doing in last 3-4 years.
Vishal, just a question. I know these are not known, and probably you are seeking answers to the same as well. But what could the modality be if it were to be an equity fund raise? Would it happen at book? Would it happen at market value? Would it happen at fair value determined by a committee if indeed this was to go down that route, whenever it does go down?
So I'm sure all those options are there, but the way government has infused capital in past is that they have basically used the SEBI formula, and they've tried to be transparent about it. So my guess is they would maybe look for the current market price and the SEBI formula around it for the capital infusion. But I'm sure government can obviously opt for anything that they want.
Vishal, as a house, what's the view on the PSU banking space and even the private banks? Which one do you prefer?
So I think as a house, we've been cautious on the sector as a whole for last 3 years. In last 1 year, you can say we've started upgrading some of the corporate banks, and in that vein, you can see we are turning incrementally positive on the sector because the visibility on NPL cycle is improving. We believe banks which are trading below their historical averages, mainly because of the NPL overhang, will start to re-rate once the provisions on this NPA are done with in either next 2-3 quarters or through IFRS on March 2018 if it is adopted then. So we are incrementally more positive. We are still, you can say, favoring the private sector banks right now because of the lack of visibility on how much dilution the capital infusion or recapital infusion would do to the PSU banks.
Vishal, just a last question from my side. What did you make of the earnings, September quarter earnings for the banking space?
So September quarter earnings was, you can say, slightly better than what the market was expecting from the banks, especially on the asset quality. I think growth was pretty much on the expected line. Margins were slightly better because of the savings rate cut, plus also some of these banks had raised capital. But on the asset quality, I think most of these banks have either reported in line or slightly better NPL formation in the quarter. So I think you can say overall, a positive kind of quarter.
Leave it at that. Thanks much for taking the time out and joining us, and have a good remainder of the conference. I'm sure people would want more answers, especially after what's happened today. But thanks for taking the time out. That's the UBS view, at least the banking view really from the UBS, from the house of UBS on the sidelines of the annual investor conference. But just a brief marking of the index. I would have thought, or actually I did think at the start of the trading day, that while we may open up about 1%, there was a high probability that we might edge up higher. That hasn't quite happened. In fact, you're still impressive 0.75%, but so you come off from the highs of the day. In fact, we're trading at the lowest point of the day. Just at the low point of the day is also about 80 points higher for the Nifty and about 288 points higher for the Sensex. So just keep that at the back of your mind. Let's get in a fundamental voice. Anand Tandon Johnson with his thoughts on what's happening around. Anand, good having you. Thanks so much for joining in. Does this enthuse you to park fresh money?
The upgrade that you're talking about Moody's?
Yeah, Anand.
Well, I think it will make a difference for somebody who's overseas and who's governed by various requirements in terms of the creditworthiness of the country he's investing in. For people in India, the market remains exactly where it was. It may have a bit of an upswing in terms of the currency and a bit of movement on the debt, but I don't think on the equity side it makes any substantial difference unless it changes significantly the inflows that come into the market. On the domestic side, I think there is no change.
But I think that's what, Anand, of course I understand that. My point is that if that has happened, which is a vindication or rather, a labeling of by one of the large 3 agencies that things look better for the country, because I don't think they have done it on print. They have done it on an expectation of how things will move about in the next 12 to 18 to 24 odd months. And if that is going to happen, and if we preempt that foreigners are going to take notice of this and put in money, suffice to say that even if it doesn't cause big upsides, it probably limits the downsides. Does that give an ammo to a domestic investor to park in money?
I think any equity investor who worries about Moody's needs to get his head examined. Frankly, these people are fellows who look in the rear view mirror and continue to drive. I mean, otherwise their basic business of credit rating would not have been such a disaster as it is. You know, they are always well behind the curve, and they will typically tell you a default is happening after it has happened. So, you know, I don't think any equity investor who has trained himself to look in the future will worry about what Moody's is going to say. As I said, it is only meant for the institutions who, because of the way that they are governed, necessarily have to follow certain guidelines. But for any investor, I don't think it makes an iota of a difference. If you are not bullish on the market, you are not going to be. If you are bullish on the market, nothing would have changed it.
Okay. So what's your view, really, Anand? Because we have been waiting for FIIs to come in and start buying. They are not doing it yet. And, you know, the data that Navneet was sharing, they actually hold net short position in derivative trade as well. Will it really change? Because that will definitely, you know, open up some more scope for the Nifty or these stocks to go up.
So let us look at what we are saying, that, you know, the FIIs have to be chasing the tails because they have not been buying themselves because they don't think that the market is attractive. Now suddenly, because somebody tells them that, you know what, the economy is better than what I thought it was, not that what you thought it was, you should therefore come in and buy, and because of that everybody else should buy. I think it will make no difference at all. Anyone who is going to be worried about this and make a difference on the equity market needs to get his head examined. So the bottom line is we have to wait for earnings to happen. There is some hope now that this earnings for the quarter has not been as bad, has not resulted in further downgrades, and that going forward they may actually be good because simply the base effect for the last year will make sure that you have some kind of earnings upside from here. So you may get to a stage where you will begin to get some level of at least double-digit earnings growth, and if that momentum was to maintain, you may have some, you know, mid-teens or low-teens earnings growth for the next year. With that assumption, if somebody is willing to be investing, yes, you know, it is something that one could be looking at. Frankly, I think it's, you know, as I said, I have very poor opinion about global credit trading agencies and their ability to do anything to the market.
Well, concerns highlighted by the analysts we've been chatting to, why the FIs are absent from the Indian markets, have been majorly because of the high valuations, and also they're waiting for the earnings recovery to come by, Anand. But if I were to ask you, what are you looking to buy now, considering once again we've seen a bounce back? Markets were a bit of jittery at the start of this week. Which are the sectors that excite you right now?
I don't think anything has significantly changed. There is no great earnings growth happening, and because of which you have to essentially focus on the same set of sectors that have that have shown some level of growth. And that means that you are essentially looking at the government spend and the direction of that spend. So anything to do with domestic consumption, which has been led by financing, anything to do with the government spend in terms of infrastructure, and some amount of changes because of global commodity prices, both in terms of heavy, you know, metals, as well as some of the softer commodities as a combination of China's moves and the Indian government protectionism. So I don't think anything changes substantially. Those are the very sectors that you will have to continue to look at.
Okay. Let's move on to the buzzing stock of the day, Sri Renuka Sugar. It's the one that we have chosen today. Nikki Mirchandani is standing by with more details. Nikki?
Yeah, the stock seems to be in a sweet position today. If you look, the stock has risen as much as 11.3%, which is the most jump that we've seen in September 2017. Volumes remain fairly moderate at 5 times the 30-day average volumes on NSE. Well, if you look at all the sugar space for that matter, all the sugar stocks are trading higher. If you look at Bajaj Hindustan, Dalmia Sugar, Sri Renuka, Shakti Sugars, among other, they all are trading fairly decently higher. And trigger for this company per se would be the company board is expected to meet on November 1. That's one of the corporate developments that I'm talking about. They're going to be expected to issue an equity share or securities pursuant to their debt restructuring plan. Remember, for this, back in July, they had signed an agreement with Wilmar, and this deal is expected to be completed by December. Overall, about the sugar industry, well, the output is seen rebounding from a 7-year low on rains. This is on account of the Bloomberg survey that we're talking. The production is expected to hit 25.88 million metric sugar in this for this sugar season that has begun on October 1. ISMA says that this is going to be the first rise in nearly 3 years. And just to give you a little background about the company, well, it's an integrated sugar manufacturing company and with a market capitalization of around 1,600 crore and a debt of nearly 3,300 crore. The stock has seen fairly decent returns for this year and has gained nearly 24%. And on year-to-date basis, in the past 52 weeks, the stock has risen as much as 29% for that matter.
All right, Nikki, thanks a lot for joining us and taking us through all those details. That's Sri Renuka, which is buzzing in trade. Let me just highlight a couple of more stocks from the broader market, which are seeing some bit of gains. Pull up Zuari Global. That counter is up almost 14 to 15% currently. And Balaji Amines have been pretty active today. Zuari Global currently trading with gains of 15%. Balaji Amines is the other one, which has gained almost between that levels of 14 to 15%. And Shrikala Hasti Pipes, just pull up the intraday chart of that counter. I think there has been some buying which has come in the last 15 to 20 minutes. Shrikala Hasti Pipes is the stock I'm talking about. But besides that, you've also got logistics stocks. So stocks like Snowman Logistics is up 11%. And I think the entire space is up today. TCI, All Cargo, Blue Dart, and even Gateway Distriparks have seen some gains between those 2 to 5%. Anand, anything in the logistics space that you like? Because this was one sector which people were talking about before GST was implemented.
Well, the names you mentioned, I prefer actually Srikalahasti Pipes. I think that is a business that where it is located, the order book will be fairly robust. And I think, there aren't that many competitors around. Valuations also fairly attractive. Logistics generally, I think those which have I prefer the industrial logistics rather than the retail logistics. Retail logistics, I don't think the margins are something that can scale very easily. So the industrial logistics, including GDL and the likes, are the places I would prefer.
By the way, new highs for Srikalahasti Pipes. That one is up about 9%. A couple of other stocks which have hit new highs today. Polaris Consulting, that continues to rise and shine, up about 7%. And SL Propack, amongst others, at 311 is up about 4% and hitting new highs. And two stocks where I want to bring the last 1 month chart. One of them is Zen Technologies. Actually, the last 10 days could also do it. But if you bring up the 1 month chart of Zen Tech, it's just had this one really strong trending move that I've seen. That's the 1 month return. That's 68%. And that's a pretty strong. And the other one is Minda Corp, which again hitting new highs today. But if you look at the last 1 month, it's been going up very, very steadily. And yeah, the last 10 days, okay, excuse me there, but 10 days move and 23 odd %. But the large portion of the move has come in over the last 10 days. Anand, select auto components, the axle manufacturers, we are speaking to Automotive Axle and a couple of others, they've had a good quarter. The Minda Group seems to have had a good quarter. The earnings reporting was fairly strong. Select auto component companies seem to have shrugged off any kind of blues that may have been there due to GST or otherwise. And the commentary was very optimistic. One of the companies, I think Automotive Axle, spoke about a 30-35% CAGR for the next 2.5 years. Do you like anything in this space?
Well, I think, obviously the domestic auto sector is doing quite well. And there may be some signs that the international markets also are not going to do very badly, given that the general economy seems to be beginning to look up in most parts of the world. So I think anyone who has a reasonable mix of export and domestic is the ones that I would prefer. Again, in auto ancillary, one thing you have to be careful about is there are a whole bunch of them which will become obsolete once the electric vehicles come through, and I think that may be faster than you imagine. So there will be people who will, things like fuel pumps and so on, which may not be in business for too long. On the other hand, things like brakes, axles, electronic instrumentation, things like that and sensors, motors, things like that will obviously continue to be in fashion and will be required for even in the future. So provided you are in the right space, I think anyone who's supplying to a reasonable number of OEMs in India and overseas, and I think the last is important, is the one that you should be looking at. Without the overseas component, I think you likely get squeezed in terms of the pricing, and that's going to be something that you have to look out for.
Anand, yesterday government kind of redefined the size of houses that would qualify for Pradhan Mantri Yojana, and therefore today we have seen a decent up move in several real estate stocks. Do you think this will really benefit at least some of the listed real estate companies? Is it possible to kind of shortlist those stocks?
Real estate, several parts to it. First of all, it's so micro market. It depends on each location that it's really difficult to take a call across the board. In my view, the important factor is that going forward, it is not so much the regulation changes. And I think RERA is a big enough regulation change that will affect most companies, and which will mean that to a large extent, it will be like brokerage, where a fewer players with good brand names are the ones, and a good balance sheet are the ones who are going to go forward and continue to grow at the expense of very many smaller players in the market. So I think even if you don't worry too much about the valuation or the near-term outlook, you should just look at those companies which have good corporates backing them and have established capability of delivering. Nobody is buying in unfinished houses anymore, and I'm not even talking about the commercial real estate. Commercial real estate, incidentally, of course, is doing quite well already. But the retail real estate, I mean, the housing part of it has been in a bit of a slump and is likely to remain so. But those which have the ability to hold on and to complete the projects without requiring retail funding are the ones that one can look at. Every attempt of the government to try and push housing is obviously welcome.
JP Morgan note, just to give you the answer to your question, Pradeep, JP Morgan at least believes that the key beneficiaries of this move will be Prestige Estates, Sobha Developers, and Godrej Properties, because they believe that a lot of these inventories of these companies is in the target range for qualification under this scheme. And of course, then they go on to believe that select housing finance companies and cement building materials could benefit. But Astral Poly was referring to that as well. But these are the three companies that JP Morgan has given out. By the way, 3 p.m. Anand, stay on before we take in the final thoughts from you. Actually, maybe request you to stay on for a bit longer as well. But just mark what the European indices are doing in the session today, just to show you whether the rest of the world is a tick of green or no. No, not quite. The rest of the world is a bit quiet today. Remember, yesterday, the same time, European markets are doing rather okay. In today's session, a bit quiet. I think the Dow futures too are a bit quiet after 2 strong days of trade. However, time for getting a sense of what are the Fab 4 stocks of the day. And Sumit today joins in. What happened to Yash, Sumit?
He's unwell. That's the reason I'm in.
No, but fair call. Let's bring in the Fab 4 stocks.
So on the Fab 4 first we have is Just Dial. Now the stock gained after Nomura hiked the target price on the stock. Now Nomura hiked the target price on the back of improved traffic growth, margins and stable realization. Also Nomura is expecting Just Dial's EPS to grow at a compounded annual growth rate of 19% over FY17 to 20 and revenue at a CAGR of 10% over FY17 to 19. Second we have Skolte Patil. Now the stock gained after Cabinet increased the carpet area by 30 to 40 square meter for houses to become eligible under the credit-linked scheme. Now this move will significantly enhance the coverage of the credit-linked subsidy scheme and should spur some demand in the real estate market. Third we have is Ashapura Mine. The stock gained after an investor Poranju bought significant stake in the company. Now in the past 1 year, the stock has seen similar or greater gains for 9 times and has continued to rise in the next day also. Also the stock has gained around 48% in the last 1 month. Fourth and the last we have is Dixon Technologies. Now the stock saw a sudden spike in trade and the stock is now gaining for the second straight session. Yesterday Birla Sun Life bought 1.6% stake in the company, and also since listing the stock has seen significant institutional interest coming in this company. Now institutional holders own around more than 25% stake in the company.
Thanks Sumit for all these details. Anand, do you track Dixon Technologies? Any views?
No, I don't.
Okay. Do you have any recommendations on HDFC Standard Life? You know, this issue has in fact received the probably warmest welcome. The listing has been best among all the insurers that got listed recently. Should one sell if he got an allotment in the issue, or do you think there is an opportunity to buy more?
Well, I wouldn't rush in to buy right now. I think, this is a kind of brand name and business that you should be holding on for a very long period of time. But I would wait for a more opportune time to buy in. If you're already holding on and you're prepared to sit out for a while and not worry too much about it, I think you can forget about, certainly doesn't merit a sell. You should just forget about the stock for the next 10 years.
Okay, well, after a muted listing, definitely there was some buying seen at lower levels for HDFC Life. Good gains of almost 20% seen on that counter. Well, a couple of your housing finance companies are doing pretty well. Pull up Canfin Homes, that stock is up nearly 6%. You've got LIC Housing, Dewan Housing, all these stocks have seen good gains. Canfin currently trading almost at day's high, and even LIC Housing, again, there's been some buying momentum which is being seen for these counters. Let's just get a technical view going on these three counters. Sarvendra, do you like any of these stocks on the charts?
I would say I could probably look at a pair also here. I think the better setups that I believe are setting up in Canfin Homes. So definitely a pullback towards 500, 495, 500 is possible on Canfin Homes. So anybody wanting to take that trade around 8-point stop loss, and you can look at that. But one thing within that space I would like to sell into this pullback, I think around 610, 615. I would like to short sell LIC Housing with a stop kept above 621 and look to buy back at around 590, 585. So could be a pair if someone wants to trade this sector.
Some questions on our social media pages as well on a bunch of stocks, Bank of India, HEG and Graphite India. The latest one is from Swapnil Jadhav on Adani Power. I was just looking at the stock, a bit of an uptick today, but off the highs of the day. Power stocks not in the thick of action in today's trade at least, but a bit of a spike there for Adani Power individually. Sarvendra, any thoughts on Adani Power?
I think the stock probably has nicely consolidated, and it's been on the long-term averages, it's been whipsawing for the last now couple of months. But activity over the last at least 1 week, 10 days tells you that as long as it's holding those longer-term averages and the way it has consolidated over the last now many months, very tightly bound between 28 to around 32. I think this could definitely have a wait and watch game. But if it breaks out, then it will give you definitely decent upsides. Anybody wanting to trade from here probably can look for a target around 40, 42 and keep a stop below 28. But a breakout past 36 is what I'm closely watching.
Well, Adani Enterprises, I think that stock's also gone up in just last few minutes. I think it was already trading in the green, but it's almost at day's high, up as much as 8.5%, levels of 157. And then do you track this counter, Adani Enterprises?
Not really.
Okay, I'll just get a technical view then. Sarvendra, on the charts, is it a buy?
See, clearly, I think the stock is now, again, just like we were discussing Adani Power, I think this is also a stock. If I purely look at reference numbers and not look at that adjustment, I think it is very close to probably breaking out. It is not in the bag. The breakout is still not in the bag, and the number is at around 160, 161. So I would say a break and close above 161, I would definitely want to trade for the next 20 points at least. But as long as it is not breaking out, I would kind of avoid right now and wait out for that breakout.
Anand, before we thank you, one last question really on technology. Today, large cap tech has taken a bit of a pullback, maybe, due to what the currency did at the start of the trading day, though I must say that the rupee too has weakened from the highs of the day, I think closing to 65 right now. But what do you do, Anand? Large cap technology, because somehow, while mid cap technology is making money and the stocks are doing really well, the same cannot be said for large cap tech.
The business model of large cap technology has to move from dollars into number of people employed to something more substantial. At least with cap, at least some of them have managed to find a niche for themselves and are beginning to exploit that niche. And I don't see the large cap making much of a headway in that particular area, especially given the size that they're already operating at. That said, I think from here on, you may find that it's an under-owned sector and may do a little better, both because of currency and because, as I referred to, the fact that globally the markets are beginning to look up. But on a more strategic, longer-term basis, I think it's still a segment of the market which will remain rather soft.
Leave it at that. Anand, thanks much for taking the time out and joining us and giving us your perspective. In just moments from now, Jigar Shah, CEO at Kimeng Securities, would be joining us on the show. But let's first cut across to Shikha Sharma as she speaks on the Moody's upgrade.
The monetary numbers today, given the policy we followed. I think that's a big vote of confidence, as I said. It's also the external world validating the strategies that the country has followed, whether we look at it in terms of the movement up on the ease of doing business index or this rating upgrade. It's reflecting that the structural reforms that we have gone through, while they may on occasion have created some short-term pain, they actually leave the country in a very strong position for growth in the future. And that's the fundamental of setting up any great business, and that's the fundamental of setting up a great economic run for the country, that you fix the fundamentals even if they cause short-term pain, and that's what gives you the trigger to go forward. In many ways, if I have to summarize, I would say actually that this upgrade is only a reaffirmation of the changing mood and confidence that you can see in the economy today.
Apart from the boost that this clearly is in terms of sentiment,
Yeah.
what kind of impact do you think it will actually have in terms of real growth?
Actually, the rating should reflect in India becoming more competitive in borrowing internationally, and that therefore means that cost of capital comes down, and that has a direct economic impact.
What about the impact on rupee? And we saw that strengthen. It opened at a 4-year high to the last closing. What impact could that have in the second round on things like exports?
I think exports are a question of what's happening on global growth and relative competitiveness of different sectors. And while the exchange rate is certainly an element, there are other elements that we have to look at in terms of productivity, business model that keeps us competitive in the export market. And I think we have to holistically look at that issue and see where are our sweet spots and how do we take advantage of those sweet spots.
That's Shikha Sharma with her thoughts as well. But last 10 minutes of trade left. Okay, we just get to Jigar in just moments from now, but Navneet, 3:10. So that time of the show, when we just tell viewers what is likely to come into the ban, likely to go out of the F&O ban on Monday. Any thoughts?
Yep, there are a lot of stocks, so watch out for Granules India. I've been mentioning this stock since last 2 days. It is just at the borderline, but once again, there has been open interest addition seen on the future side. Granules. The other stocks which are featuring are GMR Infra, Indocount. Both, if you look at the overall F&O open interest as a percentage of MWPL is between 90 to 92%, but do watch out for these real estate companies which are active today. HTIL and DLF, both of them have seen huge amount of open interest addition on the futures side. As of now, if you go by the data, possibility of them entering into the ban. But what may come out? India Cements, yesterday the open interest was only about 81%, and for the stock to come out of the F&O ban, it has to breach the 80% mark, and there has been some unwinding, which so far has been seen for a couple of the option strikes for this counter.
Okay, let's take it on with Jigar Shah, CEO at Kimeng Securities India. He joins us right now on the show. Jigar, good afternoon and thanks so much for joining us on Bloomberg Quint. Pleasure having you. What is the central message to your clients currently? I mean, irrespective of what's happened today, that's one. But is it go out and buy the India story at dips, or are valuations a bit stretched and therefore wait for a meaningful dip?
Well, hi, good afternoon. Our view to the client for some time is that the market needs to find more help from the earnings than just the liquidity, and market is not cheap. Obviously, clients are very smart. They are investing across the board in many countries, and therefore they also recognize this issue. However, I think for quality, for the surety of earnings growth, people are ready to pay premium. However, wherever you have to take a lot of leap of faith, you have to be careful. So in this situation, we find that bottom-up stock picking, where we are very comfortable with the company's business or the earnings momentum or the margin of safety provided by valuation, that's where we are recommending to the clients. Some of the themes that we are focusing on are still the private banks and private financiers, automobile companies, where we think there is a lot of visibility or evidence, and then we like the data and digital driven companies where there is a sort of global theme, and there are certain segments where there is a government spending or government reform, which includes the likes of affordable housing and the roads and construction related spending which is happening. So these are some of the themes that we are focused on largely.
Affordable housing, Jigar, a bunch of these stocks are active today. Since you mentioned bottom up, what is it that you at Kimeng are liking the most? Which company?
So in the large caps, we like ICICI Bank, we like Tata Motors, we like Mahindra and Mahindra. We recently upgraded Axis Bank to buy. So these are some of the large cap stocks we like. In fact, one more name over there is Power Grid that we like. In the small and mid cap, there are several names that we like, which includes Capital First, Edelweiss, Shrey Infrastructure Finance, then All Cargo Logistics, Coffee Day Enterprises, PTC India, and apart from that, there are stocks in the print media, that is DB Corp and Hindustan Media Ventures. So there are quite a few names. There's Himadri Chemical, which we like, Minda Industries. So there are several names that we like in the small and mid cap.
Okay. In fact, the question was specifically to the affordable housing segment, also with relation to the announcement that came yesterday, whereby government is now going to extend the subsidy benefit to slightly larger houses. Do you think there is an opportunity for investors to make money on that theme? What would you like there?
Well, I think that there are not many property companies which are a direct play on affordable housing, so that is a kind of no-no. And if you look at the housing finance companies, their valuations are pricing in a lot of the positive developments. So we think that cement is a better way to play the whole boom that is happening, both in terms of affordable housing and the road irrigation type of projects that are taking place. So cement, we think the growth is right now very low and it should pick up. It is suffering because of the weakness in the industrial stroke infrastructure capex, but it is showing some signs of an improvement. And we think companies like Dalmia Bharat, which are placed in very interesting states, especially on the eastern side, they are doing very well. They are beating the industry growth, and those kind of stocks we are looking at quite favorably. That's on our buy list.
Okay, well, it's time to take a look at what's got the dealers room a buzz as well. Darshan Mehta is here with top dealing room recommendations. Darshan.
Well, Pradeep, one of them is Sun Pharma. The counter has managed to inch up in trade today. What dealers do indicate to us that they believe there is an ongoing inspection at their Baska plant. The street does believe that, the outcome probably will be positive. It was basically for a product called iron sucrose. So if that gets approved and Sun Pharma does launch it, a couple of analyst notes that I received indicate that the potential upside could be significant. It's more than a $300 million product with very, very less competition. So if Baska gets cleared, iron sucrose could be be sold by Sun Pharma. Dixon Tech, again from the lows of the day yesterday, has moved up significantly. Yesterday also in the bull deal you saw that Birla, Sun Life, AMC bought in significant amount of chunk. Dealers do believe that majority of the selling that had to happen is over in the counter. There are some serious HNI buyers in the counter. And finally, the last one is Ujjivan. Some of the marquee HNIs, especially Mumbai-based HNIs, are accumulating the counter. They believe of a potential M&A that could happen in the counter. It was reported in one of the media reports that there could be a potential M&A. They believe that it's quite possible that this could happen. That's what dealing rooms have indicated to us.
All right, Darshan, thanks a lot for bringing all those details. Well, back to the markets, which are off days high. Nifty at 10,279. Bank Nifty has also slipped quite a lot. 25,700 is the level now where Bank Nifty is sitting at, and I think it's almost at Day's low, Bank Nifty 25,705. Let's just pull up the intraday chart of Tata Power. That's the stock which has gained momentum in the last 10 to 15 minutes. Even the futures have seen good amount of OI build-up. Look at that, it's up 5.5%, days high. The futures have also seen open interest addition of between 13 to 14%. Sumit, a view on Tata Power on the chart, does it indicate any sort of fresh breakout?
Well, yes, absolutely right. Tata Power stock is looking good to me. In fact, we have seen a stock moved up by 5%. And now immediately looking at that chart, it seems that 90 is a resistance for the counter. And if 90 is taken away, then we can see extended move till 94, 95 levels. Those who have taken long positions in Tata Power at lower levels, they can hold on the existing long positions. And in fact, if anyone wants to initiate a fresh long, then they can go ahead and initiate long positions, because immediately 90 is a resistance, and if that is taken away, then we can see move till 95, 98 levels. Looking at the chart, it seems that 90 will be taken away, and from here on, there is a possibility that we might see a move around 5 to 7% in next couple of days. So, for a trading perspective, yes, one can initiate long positions in the counter at present levels.
Okay, Philips Carbon is yet another stock which has moved up by 6% in last half an hour or so, up 9% now in total. So some mid-cap stocks which have seen buying coming in. Well, Jigar, coming back to you on pharma, a sector that Darshan was talking about. Well, correct me if I'm wrong, but in your long list of stocks that you mentioned, I don't think a pharma stock really featured, is it?
No, we are not covering the sector, but I can tell you one healthcare stroke life sciences company that we like. I forgot to mention that name, and that is Take Solutions, which we believe is doing extremely well in the field of life sciences and supporting the R&D efforts of the large pharma companies globally.
Well, Patel Integrated, one more counter from the logistics space has just gained. That's up almost 11%. And SmartLink is the other one, which is up almost 12%. Two more things I want to highlight. Let's just pull up the intraday chart of India Volatility Index. Remember, the India VIX cooled off to levels of almost 11.5 to 11.6 in the morning, and now it's in the green towards the end of the session, up almost 1.5%, back above the 13.5 mark, and once again inching closer to the mark of 14. And also the Nifty PSU Banking Index. This was your major sectoral gainer throughout the day, but looks like that's given up its gains. It's almost at day's low and trading just about with gains of nearly 0.8%. Sarvendra, what are you witnessing on the charts of Nifty and Bank Nifty? It looked to us in the morning it was more of a short covering bounce, but there's no major addition seen in terms of, if I look at the futures data. Any signs of nervousness if somebody's taken a long, or it's just okay to carry on longs?
That's a very difficult one. See, I'm of the firm belief from the last week itself when we were on the show that we have put brakes to the rally from 79 odd 100, which started in December 16, and now till around 10,500 odd levels that we have done on the Nifty. I think we have put brakes to that last week itself. For the last week closing session, we had said that we have put brakes. And to me, today also, the picture does not change. The way the overall setups were, I think today's day has not changed that at all. In fact, if it has added anything, then it's an element of a trap now. With a gap up and then for the whole day, this market has been coming down and closing lower. I think it's more a classic bull trap than anything else. And the market till now has not given any decent retracement, not even a 23% retracement, which is a bare minimum retracement in a good bull market. So till now, over the last 12 months, we have just had an 18-20% kind of a correction. We've never done a 23 or a 38% kind of a retracement. And if there was time for that to happen, I think the time is now. So 10,500 thereabouts should be a stop loss, strict stop loss on a closing basis. And my sense is that for the next 1 to 3 months, we will slip down and probably do much lower levels. But for the time being, I would say that keep a target of around 10,000, 10,100 in mind, which were the lows that we printed recently. I think 10,000 will get challenged. If broken, or more downsides will open up for the Nifty Bank Nifty.
Jigar, do you also think that market is probably overvalued and stretched, and therefore a correction is likely?
Well, if you strictly go by the valuation, which is about 17 times 1 year forward, it is just 5% higher than a long-term average PER. So the market is not exactly like exuberant or anything of that sort. The problem is that the earning growth rate continues to lag. And if you see this year, the consensus earning growth rate for Nifty is 14%. Next year, it is some 24%. And the first half, I believe the average earning growth rate is not more than 7-8%. So there's a big scoring to be done if the market expectation of earnings has to be met. The silver lining is that the second half of this year is going to be better because last year's second half was marred by the demonetization. So probably one can look at some benefit in that sense. And if the growth rate catches up, then the valuation is justified and maybe there is some more steam. But if not, and if the economy and the earnings continue to remain subdued, then I think there is certainly going to be a possibility of a sharper downside.
Okay, let's get in closing strategies from our experts. Sumit, to you first, your top closing strategy?
See, from higher levels, market has given some correction, but overall looking at the chart, it seems that from here on, we will see a good move in next couple of days. So for a trading perspective, immediately one can initiate long positions in every stock is looking good to me. It's quoting at around 400 levels. One can initiate long positions at the current market price itself with a small stop loss to be placed at 385 or probably 390 levels on lower side. 390 should be the stop loss for long positions, and on high side one can expect targets of around 415, 420 in next couple of days.
Sarvendra, your top closing strategy, one stock idea?
See, I'll give one BTST and one STBT, and purely for tomorrow itself. The long trade is on Call India, where I think that 278 is possible in the session tomorrow. Keep a stop loss there at 269.80. These are spot levels. And one trade that I have STBT is a sell on Arvind for a target of 415 on the downside, with a stop loss kept at 425.10 in spot.
Okay, so these are some of the interesting trading ideas coming in from our experts. But look at the logistics sector, which has moved in last half an hour of trade. Snowman has gained another 6%, is up 13% now. Gati has gained another 4%, is up around 9% now. Jigar, do you really like this sector? Even Sikal and one or two other stocks are also moving up today.
I'm not sure what is the reason for those stocks to move up. Unfortunately, we had a break in the export data for October. Prior to that, there was a decent growth, but overall, I think the trade is looking better, and that should help the logistics companies. And structurally, GST is a very positive development for this sector. So I would remain positive on these companies and the sector on a long-term basis. In the near term, you can have some misses in the quarterly earnings, etc., but it will remain a sort of buy on decline type of opportunity. Within the sector, we like all cargo, which is sort of underperformed and is suffering because of one particular segment of business having some one-off expenses. But otherwise, that's going to be a good company to look at and is still quite attractively valued.
Okay, by the way, just a couple of track points. Two stocks before we hand it over to Pradeep for market wrap. Kotak Mahindra Bank, irrespective of what the indices have done, and they've done virtually nothing if you take the weekly account, but a Kotak Mahindra Bank over the last 5 days has only gained. So it's got gains on all of the last 5 days, which is a telling statistic. And then the other one is Z, which has closed down on all the days this week. So in terms of outperformers and underperformers, these are the two stocks that stand out. May not have been big cuts or big gains, but both of these stocks have had these individual movements. But let's wrap up today's trade though and hand it over to Pradeep for first giving us the highlights of the large cap space and the bank and the indices themselves. Pradeep?
Yeah, if you look at Nifty, a bit of disappointment, I would say, the way index has corrected, and this is going to be the second week or consecutive week of negative returns from Nifty, and despite the gains that we have seen yesterday and today, finally closing with gains of 55 points maybe, or 50 points. We'll have to wait for it to settle really, but Nifty Bank is up 250 points, again off day's high. If you look at mid cap and small cap though, they have relatively managed to hold on to their gains, but both these indices were also up between 1.25% to 1.5%. So they have also come off the day's high really. If you look at some of the key index movers and see which stocks have really helped the Nifty today. Cipla, HDFC, Maruti, Tata Motors. So we clearly have Sun Pharma also, which means pharma is doing well, and so is banking. ICICI Bank is doing well, auto is doing well. So these are a few sectors which have really helped. Some of the heavyweights that didn't quite participate in the up move would probably be RIL1, which is closing with gains of just about 1%. L&T has not participated at all, and among banks, Axis Bank has surprisingly been a non-mover today. That's interesting. At the bottom, and this is a sustained trend since morning. Even with the first tick, we saw IT stocks at the bottom. Wipro, TCS, and Infosys, they closed the day at the bottom as well.
There were a lot more gainers from the broader markets. However, the benchmarks closed off days high, and clearly Nifty Realty was the top sectoral gainer, and all the realty stocks were in focus after the cabinet increased the carpet area for a couple of affordable housing schemes. So stocks like HDIL, look at that, that was up 6%. Actually, that rose just in the second half of the session. You also had DLF, which is also in the F&O space. That stock touched its fresh 52-week high. That too gained about 7%. A couple of small cap players from the same space, Kolte Patil, Ansal Housing, saw big gains. Kolte was up almost 12% today, closing at levels of 277. And you also had Ansal Housing, which closed the day with gains of 9%. While Shriram Transport was one of your biggest F&O gainer for the day, so that counter was active right from the start, closing the day with gains of nearly 6% coming about. Housing finance companies from the likes of Canfin Homes, and you also had LIC Housing, were up and about. Some bit of fresh buying was seen in these counters in today's trade. The logistics space was pretty active. Snowman Logistics gained today. That saw gains of almost 12%, and the gains actually just came in the last hour or last half an hour, as it is shown on the intraday chart on your screen. And new kids on the block, HDFC Life listed today, though the listing was just about muted, but it gained momentum during the day, finally closing the day with gains of 18.5%. And 5 Paisa listed yesterday. That counter was locked in lower circuit. It was down about nearly 5%. And two counters which we mentioned almost every single day, Rain Industries and HEG, once again were under pressure. Some bit of profit booking was seen there, Neeraj.
That's the sum and substance of what happened in day's trade, but let's just bring up the contributors list, and you will see that it was technology under pressure all through. It was completely dominated by technology on the downside, which negated any kind, tried to negate the moves that came in from some high beta names and heavyweights. So again, heavyweights dominating for a second in a row. Mind you, these are the same set of stocks that almost participated in trade yesterday. Heavyweights moving up, you typically have the markets doing well, but technology being a bit of a spoil sport in the session today. So Infosys couldn't quite do what it did in trade yesterday. And the market breadth, mind you, corrected in the latter half of trade. So we did come off somewhere during the start of the trading day. We had a very robust market breadth. We've ended with a bit of a narrowing of the market breadth. So close to 3:5 in favor of the advances. And yes, green dominates, but a bit of red started creeping in, a bit of a green started going away, which is, I think, actually the key highlight of today's session. Just bring up the weekly performance once and just show you what's happened to individual movers in the week. And you will see that it was a flat week for the benchmark indices. Maybe the Nifty Bank did reasonably okay, but Reliance Industries participated, Kotak Bank participated, and as I said, banks did well. So Kotak Bank, ICICI Bank, a couple of names. Let's get the camera a bit closer. You see Kotak Bank, ICICI Bank, and to an extent State Bank of India. These were three names which did well. And amongst the losers, I think Bharti Infratel, Adani Ports, and to an extent oil and gas, ONGC in particular, which lost about 7%, negated any kind of gains that some of the others could have gotten in. So weakish trade throughout the week, except for the last 2 days. But I must say, just a touch bit disappointed with how the day has closed today. On a big rating upgrade that you've gotten, one would have anticipated that some short covering and a few other moves would have led the index higher. But we actually closed almost 1/3% lower from where we were at the start of the trading day. Chairman, Jigar, as well as our experts, thank you so much for joining in today and giving us that perspective. Really appreciate you taking the time out and being with us today. But on this note and on the sidelines of the UBS India Investor Conference as well, we have Gautam Chowcharia, needs no introduction, joins us right now on the show to talk about what's happening at the conference and how has the conference gone by. It's been 2 days that the conference has been around, and we've got a new number of voices from the conference as well from the UBS table. But now Gautam Chowcharia with us. Gautam, thanks so much for joining in. Was today dominated completely by the India upgrade, and if so, what was your message to clients?
Good afternoon. So the conference went well, but obviously today the upgrade news was the topic of discussion with investors also, and clearly it was a positive message to them as far as sentiment goes. Our message to investors on this news is that the fundamentals behind the upgrade have been fairly well known over last few years, which is macro stability driven by fiscal consolidation, current account, etc. And that has been reflected in the flows into Indian equity markets, in bond markets, has been reflected in yields, in credit spreads. So it's not something which the markets didn't know about. It's only the actual rating event which came in now, and that too from one of the credit rating agencies. So if you look at the credit spreads out there, if you look at the yields out there at which corporates were borrowing from outside India, they were pricing in the new rating rather than the old rating. So the rating is just an event, it's just a reassurance of the macro fundamentals, but in itself does not alter or create a new trajectory for new flows or fundamentals per se. But obviously it's a sentiment positive for investors, definitely a reassuring signal.
Since we probably thought that markets were a bit heavy at these levels, looking at the valuations, this rating upgrade, if you said was already kind of factored in, which means it is also factored into the valuations or the earning projections that you already have. And then, do you see further scope for upgrades here on, or do you also believe that probably valuations are on the higher side and it's difficult for markets to move further?
That's been our view and still is the view that valuations are very rich of earnings estimates, which in our view will still be cut while we have seen a credit rating upgrade, but earnings, we are still seeing earnings momentum being negative for India, and even after the second quarter results, the implied earnings growth for Nifty for second half fiscal 18 at 20% still seems very optimistic to us. And on top of that, the fiscal year 19 forecast by the street at 18-20% earnings growth is just way too over optimistic. So we will still see earnings momentum being negative in India, and that would be at some level an overhang on the market, but markets have been ignoring that recently because of strong liquidity and local flows.
Hi Gautam, good afternoon. This is Navneet. I don't know if you remember, I had interviewed you at the start of this fiscal. At that time, you had mentioned that demand in India was still normalizing. It had not normalized. We are halfway through. First half is done. How would you sum up the first half of this fiscal, and do you think the second half would be better?
So obviously of this base, there should be definitely better. But again, if you're looking at better in terms of normalizing from a disrupted base, that's a different connotation of what better means versus an acceleration in the economic growth trajectory versus what we have been seeing for last 3-4 years. So I think the forecast out there for GDP growth for next year, for earnings, that seems to us reflective of normalization, while the earnings forecast next year seems to be a very big acceleration in economic activity. So while GDP estimates are building in normalization back to 7.2, 7.4% growth rates next year, earnings growth at 20% still seems over optimistic and are more aligned with a GDP growing at 7.8% rather than a 7% odd number.
So the disruptions that you are probably referring to in the base period would include the demonetization and GST. If we read the Moody's report, they actually think that both these factors are positive for the economy and macro fundamentals will actually improve because of both these measures. But looks like, as an equity analyst, you don't really think that the impact is positive.
No. So GST reforms obviously is a big positive. There's no debate about that. But that's something which we didn't need today's rating upgrade to know about. It's fairly well known by the market for the last few years. Markets have been waiting and anticipating this GST reform. And when we look at, so even with our cautious stance near term, we have been arguing that the long-term structural story of India remains intact, and the reform agenda has been one of the very, very impressive ones we have seen over the last 3 years. And that's what keeps us hopeful of the long-term India story. Despite the near-term worries around over-optimism of the market, not about the stability or quality of the economy. In fact, we have seen one of the most solid macroeconomic parameters over the last 2-3 years, given the way the policy direction has been. But it's a question of expectations, what the markets are looking at and what is the delta. So markets are building in a strong economic recovery near term. We don't think that will happen. But the longer term story obviously remains solid. There's no debate about that.
As you wind down this conference, what's the central message that investors are going home with? India remains strong, but maybe other economies like Brazil, Malaysia, etc. find favor?
So I think whatever we discussed with many investors, we had almost 100 investors from outside India attending the conference, and we also had a few of them meeting various government officials a couple of days back. So they remain impressed with what's happening on the policy front. What they also vary about the valuations and still lack of a proper pickup in economic activity. And they're still looking for that to play out in the future, because you have to remember most foreign investors are already very, very overweight India. They have sold a little bit here and there, but India is still the most overweight markets for them. So I think the feeling we get is they are looking for actual earnings recovery to happen, but they're very, very, very hopeful and confident of that to play out over the future.
You know, a big concern has been whether the government of India has in fact kind of jeopardized the fiscal stability in an effort to stimulate the economy and support the PSU banks by way of huge bank recapitalization. What do you think is the kind of consensus view emerging from big global investors?
So not really. In fact, they have clearly taken care of concerns around macro stability and fiscal concerns by the way that they have designed the bank recap, which is largely liquidity neutral and does not impact fiscal in the short term. So clearly they've taken those concerns. So I don't think investors are at all worried about bank recap creating macro instability. They would worry if the government starts taking populism measures next year, trying to stimulate the economy pre-elections and drive growth. So that would be a negative. But the bank recap and the way it's been designed to be liquidity neutral, I think that's been taken very positively by markets.
Rising bond yields both in India and overseas was also another concern, maybe a bit related to the risk of fiscal deficit.
Yes, but that's typical short-term markets reaction. Markets do overreact on both sides. They do get over-optimistic and over-pessimistic. So from our cross-asset strategist perspective, in India, we do see the credit side or the bond side, the 10-year now looking attractive. We see equities and FX less attractive, but the bond side definitely looks attractive.
Gautam, just a last question. Well, that's been the common theme. We've been talking to a lot of market participants. The concerns that they've been highlighting from the FI community has been on back of earnings recovery, which so far is not visible, and also higher valuations. But I just want to check, since you're interacting with a lot of FI investors there, are they expecting any more reforms to come by?
They're hoping for more reforms to come by, but they're aware that now we're getting into closer to the election cycle, and we may not see any big bang reforms happen in a hurry, and any further big tougher reforms will possibly happen post elections.
Fair call, Gautam. I'm glad you had a good conference. Thanks much for taking the time out today and speaking with us at Bloomberg Quint. With that,
thank you.
With that, it's a wrap on this leg of this edition of Countdown as well. We'll be back with more on the other side. From Pradeep, Navneet and me, Neeraj. Thanks so much for watching.